Dave, you just mentioned the technology sector being up 24% this year. You look outside the US, there's markets that are up multiples of that, like emerging markets in general are just up over 30%.
Hmm.
Well, I'm here to bring in a broad asset class, which is doubled up that. It's up 60% year to date. And this is even with a 10% correction in late October into early November. And that, of course, is gold, which this is the best performing, I'll say, quote unquote, broad asset class by a country mile. Gold's up 60% year to date. It hasn't traded below its 200-day moving average since October of 2023. So it's been in a very strong, robust uptrend. And even during the latest correction that I just mentioned, it never went into oversold territory as measured by what we call its RSI. It's a little bit of a wonky indicator, but this is just showing just how strong this trend has been. And yeah, gold's up over 60% this year. And get this, since GLD, which this is the ETF that tracks gold, there's a few of them now, but this was the first one. Since GLD's launch in the fourth quarter of 2004, it's outperformed the S&P 500 on a cumulative basis. Gold, as measured by GLD, is up 773% cumulative versus 748% for stocks. Of course, there have been some long stretches along the way where those assets and those asset classes have diverged. But if you're just looking at a point in time, gold going back to its launch of the ETF is now outperforming stocks. So it's really hard to pinpoint the narrative or the thesis behind why gold's outperforming. I think probably the best or the strongest one here is it's a very important central bank reserve. It's the second most important reserve asset for central banks behind the US dollar. But of course, narratives or they arrive and they change, after price has its say. So yeah, it's gold. And I'll end with this. I think that when we look into the remaining part of 2025 and going into 2026, since we're talking about gold, the relationship I'm going to be watching is actually the relative strength relationship between gold and then Bitcoin, which is something that people often refer to as digital gold. So yeah, gold is definitely taking the cake in terms of broad assets this year.
Yeah, I think it's impossible to kind of predict going back a year, right? I think going back a year, no one would have predicted. Dave, you said this at the start, is utilities is in the top three of the performing sectors.
Right.
When you think about it, the reason is utilities is an AI stock. And I need to caveat that a little bit. It's not a tech stock, but it is AI driven theme. The power that these data centers are requiring from not only running the computers, but also running the cooling units to keep everything cool.
Hmm.
It adds so much demand for electricity that these utility companies are actually benefiting from AI. So that old relationship of utilities being the safety stock, well, it just got thrown on its head this year. And I think when you look at that, the big thing there is it's kind of funny when I look at, we're in the middle of prediction seasons. And it's funny when I look at all the predictions for, I know, Aaron, you just made one for 2026, but it's not really predicting anything. It's watching how relationships develop. And that's a big thing of what we focus on here is we're not trying to predict what's going to be the best performing asset class in 2025, in 2026, in any given calendar year. We're always going to look at the data and see what is going up the strongest when bull markets are present or markets are rising. And then when markets pull back, and they will, because other sectors have not done as well this year, we're going to be avoiding those or other parts of the world. Non-US stocks have had a very strong year, but that doesn't mean, every part of the global economy is doing well.